I manage a non-cyclical consumer fund. It's basically consumption fund, and the benchmark is your Nifty India consumption. So, before we start, I think just to give you a perspective, the presentation is divided into three parts. One is the first part is basically we have discussed on the longer term drivers of consumption, and these are the 5, 10, 15 years kind of a drivers, and then the second half is talking about why it is pertinent to look at the sector now, what is happening, what has happened in the last couple of years, and what is improving at the margin. And third part is a small part on our fund, some of the details. Basically what we are highlighting here in terms of the longer term structural drivers for consumption are these 5 points, and each of these points are dealt with going forward in detail in separate slides. But to kind of quickly summarize is one, India is at an inflection point in terms of the per capita income, and we are expected to move from the current $2,500. The presentation talks about $2,000, which is like couple of years back, and we are talking about the decadal opportunity. Now we have already reached close to around $2,500, and we are expected to reach $5,000 by 2031. Now this journey is important because the per capita income, whenever the countries have kind of gone through this kind of a per capita journey, the consumption accelerated significantly. So that is point number one. We will come to the details around it later. Demographic dividend is something which we all know. India is a young country, but I think more importantly the dependency ratio is decreasing, right? I mean, with women workforce kind of coming into the overall the participation increasing, the dependency on one member of earning is decreasing significantly, and that opens up kind of, that is very, very good for overall a country as well as the consumption as a whole. Then premiumization, again it's much talked about, but I think why it is happening is something which we will look into in detail, and it remains one of the key drivers for consumption growth. Formalization is a clear trend which we have seen, that the formal part of the economy, the organized sector has taken market share from unorganized. And lastly, we will also talk about digitization, which has improved the accessibility of products and services across the length and breadth of the country, and is a key enabler for consumption in the country. So this is one of the key slides. So if you chart on the left hand side is basically the per capita journey of China versus India. So India is on the lower side and China on the upper side. So China crossed around $2,500, $600 in terms of per capita in 2007. Okay, we are now at around close to around $2,500, and they crossed $5,000 mark in terms of per capita in 2011. So this 2006 to 2011, when they were between $2,500 to $5,000, I mean, that journey is very important, because if you look at on the right hand side chart, some of the consumption categories growth rates between that time simply accelerated significantly. I mean, they were growing. China is obviously an economic miracle, and they were growing at a very high pace. But I think from a consumption point of view, not only China, but if you look at Vietnam, if you look at Indonesia, you look at Brazil, whenever they were in this period, basically $2,500 to $5,000 in terms of per capita income, their consumption accelerated in a meaningful way. So most of this happens because before that the country's population is mainly look for some of the basic requirement, and then once your income goes above a threshold level, then the premiumization and rest of the enablers kind of kicks in, and that is when the consumption kind of accelerates significantly. And then beyond $5,000 again the pace comes down, because then you have kind of consumed, or you are in a decent level where the consumption cannot grow at the same level. At the end of the day, what we are focused on is the delta of growth, right? I mean, so US or some of the European countries might have very high per capita income, but the consumption growth is not happening in the same way, because they are at a much higher level, which is, so that journey is very important in my view, and that is what we are expecting from India as well. The next decade is going to be very, very important. Demographic dividend, obviously India is one of the, in terms of the larger countries, it's one of the youngest country with 28-29 years of median age. And I think also this is just one part. I think what is more important, I mean, a high a young population is important, but what is more important is that with urbanization and with women workforce coming into play, our dependency ratio is coming down. With more urbanization, the economic activity in the country is increasing, and that is leading to higher disposable income. Similarly, with more women participation, the dependency ratio is kind of decreasing, and that is also very, very important. So from a again from a consumption point of view, these things are key enablers, where ultimately the disposable income improves, and the economy or the population is more productive and more efficient, and that is how you start getting more disposable income, and you consume also. As a young population, you consume also much more compared to, let's say, a country like Japan, where the population is aging and the consumption is coming down. So premiumization is something which everybody talks about, but I think the key fundamental reason of a large premiumization is basically is kind of captured in this slide, where if you look at the left hand side chart, and basically left hand side bars and right hand side bars. So the point to, again, I don't know whether it is visible to everyone at the back, but the top two bars are basically the bar which are $10,000 and plus household income. So effectively converting to Indian rupees is somewhere around 8.5 lakh per annum, kind of a
yellow pointer, yellow is the pointer.
Yeah, okay. So if you look at these two, I am talking about these, these two bars, and this is $10,000 to $35,000, and this is $35,000 plus. So these are the two bars where above 8.5 lakh income levels. Again, from a income perspective, if you look at from a consumption perspective, from a premium consumption and luxury consumption, and the overall consumption perspective, these are the two population categories which consumes the most, and this is 2021 and this is 2031. We will be somewhere in between, but this is completely getting inverted, right? And the population which is going up above $10,000 household income is somewhere close to around 190 million, which is 19 crore household, compared to this number, which is somewhere around 75 million or 7.5 crore household. So we are talking about 7.5 crore household which were there, 8.5 lakh plus household income in 2021, moving to 19 crore household in 2031, which is a massive shift, And you know, this is the consuming class, I mean, to a large extent, for the premium and the luxury products. And we are talking about premiumization. You know, it's not that the bottom two categories don't consume, but we are talking about the premiumization, and hence these two charts are important. Is going 2.5 times in a matter of 10 years. And I think it's very, very powerful, and this is what is kind of leading to a massive kind of premiumization trend across the categories. I think this is just a pictorial representation. Obviously, the consumer of today has many choices. He has multiple options, and the lifestyle has changed dramatically. So nothing much, it's self-explanatory. But I think consumption will continue to grow as and when the per capita income improves. And the lifestyle keeps on kind of improving, and the lifestyle keeps on kind of premiumizing. Some of the examples, again, premiumization has been very, very important. The first one is a detergent. In the detergent space, a large part of growth in the last decade was actually happened because of the top end of the of the detergent product did extremely well. So if you look at the kind of contribution, this number 17% in 2011 has gone to 31% in some of the more developed countries, like some higher per capita countries, like even in Vietnam, or even in China, Brazil, etc. This number is much higher. The contribution from premium end is more than 50%. This is an example on paints. Again, little kind of not exactly visible again, but these are paint offerings. And the premium end, if you look at the right hand side chart, the premium end in the last 10 years has grown from 25% to now around 36%. Formalization, again, is a very important, from a listed company perspective. Formalization is very important, because at the end of the day, we are talking about the listed universe, and most of these consumption names they operate in categories where there is a lot of unorganized play, right? And after GST especially, and some of the other government reforms, the unorganized to organized trade has actually kind of accelerated. So the formalization will continue even going forward. There is still a lot of headroom for the organized players to get market share from the unorganized. I think last point on the long-term drivers is digitization, and this is probably, while this is the last point, probably this is one of the most important point, and this has started around 10-15 years back, and probably still at a very nascent stage. Digitization, if you look at some of the numbers out here, the access to internet today is for the Indian population is close to around 66 crore to 69 crore people have access. This number will go up by 50% by 2028. Similarly, if you look at the e-commerce retail penetration in India, basically this is the total retail universe, and how much is kind of transacted on e-commerce platforms is only close to around 8%. This number is around a year back, maybe this number would have gone to 9% or so. But there is a long runway for the digital platforms to kind of grow. But more importantly, what the digital platforms have done is the kind of accessibility today we have, not only in cities like Mumbai, where everything was anyways available right from the beginning, but today even in tier 4 cities and villages, you get some of the premium products thanks to some of these digital platforms. Platforms like Nykaa, platforms like again other e-commerce platforms, they are making accessible products and services across the length and breadth of the country, which was not possible 10-15 years back. So I think this is a great story in terms of, again, digitization is helping consumption to grow. Coming to the second part of the presentation, we those were the 5 points why we believe that consumption as a story will continue from a decadal perspective. India remains one of the key consumer market. Some of the other data also I'll show. If you look at the contribution in of consumption in the overall economy, the private final consumption data which we get in GDP data, that is close to around 55-56%. US is also a consumption economy. India is also a consumption economy. What it means is that a large part of our economy is driven by consumption. It's an internal kind of a consumption driven economy, unlike, let's say, China, which is an exports driven economy. US, for example, the private final consumption contribution is close to around 68%. Now this this is the second leg of the presentation, and what we are trying to kind of highlight in this particular section is basically why it is important to look at consumption now. I think Anup gave a very good background that the sector kind of struggled in the last couple of years. We all know that there was a problem at the mass end of the consumption. While the premium end was doing well, the mass end was struggling to a large extent. Especially the rural consumption was struggling to a large extent, and one of the main reason was high inflation. So that was clearly a challenge. So what we are highlighting is that if you look at the inflation as a trajectory clearly, and so again some of these points are discussed in detail going forward. Inflation trajectory has started kind of looking better. Obviously it is a monitorable. It has been couple of or 3-4 months of good data, but this number has started becoming more encouraging, which is good for consumption overall, especially for the mass consumption. If you look at I have one of the chart later on. So this is again consumption, private final consumption data which we get from GDP, which I was talking about. This number in FY24 was almost 15-20 years low, 4% growth versus GDP growth of 8% last year. I think from there it has recovered in the first half of FY25 if you look at. This pillar, basically this bar is the consumption bar, and the other one is overall GDP bar. So I think there is a recovery in the last 6 months or so. So that is one, and this is happening because of a couple of some factors which we will discuss later. But that was something which I wanted to kind of show you. Again, from a if you look at multiple state governments, including Maharashtra, they have announced the welfare spending programs, right? I mean, so what I am talking about is this one. If you look at this all, basically around 15-20 months back, MP started, just before their elections, state elections, they started this program where, they announced close to around 1250 rupees per month for women below a certain threshold of income. And, that program was kind of credited in terms of, the ruling government kind of coming back to power. Similarly, Maharashtra has announced a big scheme. Telangana, Karnataka, there are few governments who have announced. Even after that, I think Delhi, I think also has a similar scheme now with the new government in place. and Odisha and Jharkhand, they have also announced. I think what it has become, in the last few months, it has become a kind of a template in most of the states before the state elections, to kind of announce these schemes. Now, basically the implication is something which is which I wanted to show. So the total budget, of these incremental budget for these programs is more than 3 lakh crore. Couple of states are not included here. So in the chart out here, which are basically Odisha, Delhi, and Jharkhand. What I mean to say is that, in the last 1 year, more than 3 lakh crore of welfare spending program has started. Now this is good for the mass consumption. While it is, there are debates around whether it is good for the overall economy. There will be some shortages on the capex side, etc. But I think since we are talking about consumption, this is definitely good for mass consumption, because this gives a certain level of disposable income, certain level of base income to a large population, especially benefiting in rural areas and in in the urban lower middle in the urban lower income groups. So this is one part. So welfare spending programs have started, and this is a big thing. And then now recently we all know that, in the union budget also, the tax saving which was announced, close to around 1 lakh crore. I think that is good for the urban consumption overall. So I think government is recognizing the fact that there is a problem at the lower income level, right? Forget about the consumption, but there was a problem at the lower income level, and that got manifested into multiple kind of outcomes. And obviously the feedback would have gone to the government, and probably that is why some of these programs are kind of coming into picture. Because at the end of the day, COVID was as the pandemic was not good for certain section of people, where they lost their livelihoods, etc., etc., and some of the labor intensive industries, they got wiped out. So I think somewhere down the line, the impact was there in the economy. The inflation was a big impact. So all put together there, I think somewhere down the line, the government was also kind of the government also realized that these schemes, or some of these income schemes, are required for certain income level for people. Third one is the normal last year we had a normal monsoon, so that is another positive point. And last is rural recovery. So we talked about last 2.5 years of bad rural economy, but if you look at last 6 months, and you hear some of these consumer companies commentary, they are already talking about rural market recovery. So while the incremental problem is coming in the urban side of the consumption, the rural market has started recovering, which is a good news, and part of that might be because of some of these welfare spending programs which have started. So we discussed this. This is basically the last year the monsoon was good. Inflation trend is, we need to monitor, but I think the trend line is now coming down, and is good for the consumption. I think this is very important chart. Again, this is last 22 years of data, and what it shows, the left hand side is basically the consumption data, India nominal private per capita consumption, and the right hand side is the general India's government consumption oriented spending. Now this is all fiscal transfer which government does through multiple schemes. It includes your MSP programs, your Narega schemes, multiple stimuluses which government kind of puts into the economy for for consumption. If you look at, there is a very high correlation. 2008 to 12, the consumption growth was very strong, and so was the government spending. So I think in a large way, the overall consumption, including the urban, rural, mass, premium, overall consumption in the country does well when the government puts in the stimulus. So that is the end point. I mean, that is the correlation which I wanted to kind of drive home. Also, this is the chart of US versus India. So this side of the chart, left hand side chart, is US consumption. This is the real consumption data, and this is the India's private final consumption data. If you look at, this was the COVID time, right? March 2020. So consumption dropped in US, but they caught up very soon, within 2 years, with the pre-COVID trend line, the trend line of the consumption growth. And the reason for the same was, US government came out with their stimulus package, which was called as stimulus and relief package, where they kind of gave $1,200 per person, and around $500 to every child. So I think that helped them to kind of recover very fast from the consumption drop which was seen during the COVID. In India we did not see that at that point of time, and till FY24 consumption, in terms of the trend line, India consumption was actually below the pre-COVID trend line. So there is a clear gap which we see. A part of the reason, there might be other reasons also, but a big part of the reason was this stimulus package. Again, what we showed, what we saw in the last slide, kind of this slide also highlights the same point, that in some of these extreme situations like pandemic, etc., where there is mass livelihood kind of getting impacted, government stimulus and government kind of help is very, very important to get back to the similar trend line. It's a large scale budget which has been kind of government is now putting in for the welfare spends, and this has already, in my view, has started showing results in terms of the rural recovery. So last 2 quarter data, basically third quarter number has also now come in. So we are talking about last 2-3 quarters, rural consumption is now kind of has gone ahead of the overall consumption. This is another very interesting chart. We talked about how the labor intensive industries struggled, and if you look at the left hand side chart, and basically this is the K-shape recovery. The fundamental behind K-shape recovery is in this slide. If you look at this one is MSA, the labor and capital intensive exports. This one, the lower chart, the lower line is basically the labor intensive exports, and the upper one is the capital intensive exports. If you look at some of the labor intensive exports related line, which is indexed to April 2010, in the last 10 years there has been hardly any growth, hardly any growth. And the reason was very clear. Some of these industries like textile, etc., they did not do well, moved out of country. Large part of, we lost market share in textile, for example. Similarly, ready-made garments, so leather industries, they all put together, some of these labor intensive industries are listed out here in the chart. But overall, we did not do well out here in the last 10 years, while the capital intensive ones, they did well. So another reason why, the mass end of the economy suffered, mass end of the consumption suffered. Similar is the chart on the right hand side. This is basically the manufacturing GVA, which is nothing but the gross value added, and MSME related manufacturing GVA, which did not grow. Again, you see the the overall growth has kind of struggled in the at least in the last 4 years. So coming to the same point, I think there was an issue in the last few years, which needed to be kind of tackled, and government is coming up with their own measures to kind of tackle the issue. Yeah.
Rural and urban consumption. So what it tells you that basically rural consumption is twice 2x of the urban consumption. That's what.
Yeah. So basically, the last 2 quarters only. If these companies, this is Nielsen data, and Nielsen don't give data to anybody else but companies. So this we have borrowed from Marico, and this is published number. It is out in the public domain. So, but if you go back earlier, rural was in the negative territory. So rural was not doing well before, or till FY24. I think last 6-9 months rural has started coming back, but at a low base, but the trend lines are good. Yeah, so absolutely what you are saying. So broadly we have discussed the entire PPT. Now the last part of the PPT is related to the fund. So this is HDFC non-cyclical consumer fund. Again, the name non-cyclical is because we have excluded some of the cyclical elements within the consumption. Now consumption as a sector is very broad. It includes multiple other sectors. We have excluded some of the sectors like automobiles, power and realty, because if you look at the last 20 years of data, some of these sectors, they showed a lot of cyclicality in terms of the earnings over the last 20 years. Nature of the sectors are also like that, and some of these sectors like autos, etc., they are I mean, even in realty and power, they have been kind of exposed to multiple cycles, and the earnings have been volatile if you look at the 20-year period. So we have excluded those. What is included, however, is basically the normal FMCG, retail overall. Now retail, also the QSR, restaurant, etc., media, telecom, etc., they are included. Healthcare services, which is basically the hospitals and diagnostics, they are included. And it's a large domain. Ultimately the sector is very big overall. We'll come to some of the details later. Coming to the valuation now, again very important part of the overall investment thesis. I think from a valuation perspective also there has been some moderation. So I think this is till what it shows is that now the sector is broadly trading around last 5 years average. What is more important to me is that if you look at some of the Bloomberg or the consensus trade, what we call for the next year and the next year, kind of FY26 and FY27 earnings, those numbers have also been moderated because this sector has not done well. In plain simple language, the sector has not done well. There was an issue in terms of the demand in the sector, and the sector has not done well. So there were multiple rounds of earnings cut, which has now led to the expectations being very, very moderate. So earnings growth for the next couple of years are not very high, and I'm as an analyst, I think that some of these expectations can be met if the pickup and the kind of tailwind which we are seeing in the sector. I think some of these expectations can be met. Valuations are now reasonable. The sector generally has higher valuations compared to rest of the other sectors because of multiple reasons, and some of the reasons are one is it is more predictable. So while it goes through its own cycles, in terms of, lower and higher, but the volatility is not like, today it is 10, tomorrow it will be -10. It will not be like that. In some of the other sectors it can be, but here it will be, today it is 10, it can be 8 or 12, or somewhere around that. The volatility is less. So that is why it is, it is non-cyclical. The again, if you look at, the quality of balance sheet, so just to highlight, this sector would have given in the last 20 years, if I look at the longer term horizon, and I think he mentioned it in the beginning also, this sector would have given the highest number of compounders in the last 20 years, and I don't want to name some of these companies, but I think these are, these are very well known companies. The earning, these are typical compounders which basically grow year over year. They may not be very exciting in terms of, they don't grow 100% in a year, but they grow like 10-15% year over year, and that is what the compounders do. And they have created, some real wealth for the overall investors community in the last 20 years. Balance sheet is very good. Return on equity, etc., which are key parameters to look at the quality of the company. It's on an average, the sector scores pretty well, in terms of some of these financial aspects. Government intervention is low in the sector, right? I mean, this is B2C. It is, we are kind of dealing business to consumer. It's not B2B, and hence the volatility is less. Once it is a household product, you might go to other competition, but you don't immediately switch off. I mean, if you are using something, some of these FMCG, or even from a restaurant QSR, product, etc., some of these products are very sticky, and over a period of time you continue doing some of these, and the government intervention is less because the pricing power is in the hand of the company. And other regulatory purposes also, the government intervention is very, very less, which is another reason why the multiples are higher. And the lastly is obviously, the global macro related headwind, etc., are not there, right? It's largely a domestic sector. I mean, we all know what is happening today on the global macro side. There is a lot of uncertainty with the new government coming in the US. So in this sector, those issues are relatively less. While there will be companies who on and off kind of, or in some cases will get impacted by some of these regulations, but large part of these companies are not impacted by the global macro. I think these are normal disclaimers and normal details. As part of the portfolio, we have around 60% large caps in the portfolio, and these numbers, the performance of the fund is there. Done better than the benchmark. I think to broadly, to sum it up, I think this is the final summary slide, and what we talked about in the last 40 minutes or so, 45 minutes or so, is basically the overall consumption theme is unfolding this decade. In the next 10 years, we will see some of the plays kind of coming in. These are some of the long term drivers which we talked about. First was that India is at an inflection point in terms of the per capita income. We have crossed $2,000. We are close to around $2,500 in terms of the per capita income, and we will cross $5,000 by 2031. And whenever the other countries have gone through that, there has been a sharp acceleration in terms of the consumption, and we showed some of the data points around it, right? Second point was on the demographic dividend. We talked about the low median age. We talked about how the dependency ratio is coming down. We also talked about how urbanization is kind of going up. Then third is the premiumization part, where we discussed the bar and the household which are above 8.5 lakh category, how those households are now going from 7.5 crore household to almost close to around 19 crore household. India has total 35 crore household, just to give you the total number. So that is a meaningful shift which is happening for the upper middle income category of people, which will lead to further premiumization in the next few years. The trend of premiumization will continue in our view. We talked about formalization, and we talked about how digitization is helping the accessibility of products and services, how we are able to access some of the premium products across the length and breadth of the country. We kind of talked about the valuations. We talked about the near term factors, including what is changing at the margin. Clearly inflation is becoming benign. Governments have started welfare spending programs in multiple states. There was in the budget we saw the announcement from in the union budget. Monsoon was good last year, and there is companies are talking about rural consumption kind of now becoming better, in terms of rural consumption has started picking up. And lastly, we talked about why, what are the key strengths of these companies, the quality of the companies, and why what are the key differentiating points. So obviously the government intervention is less. They have very high pricing power. The balance sheet, return on equities, some of the financial parameters are the best in class. Relatively the earnings growth is less volatile, and global macro related headwinds are not there. So broadly, this is the summary of the presentation which we did. Happy to take any questions.